What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is April 22nd of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, this may very well be one of my more important updates in the year of 2024. We are at a crossroads here when it comes to crypto and global equities. The asset markets as a whole are sending some very important signals, and with the passing of the halving event here just the other day, we need to spend some time to talk about the changing dynamics and the things that we need to watch in order to make sure we not only maximize profits into the rest of 2024, but beyond that as well, hedge accordingly in the event that things go wrong. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to go ahead, spend some time here to talk a little bit about Bitcoin's price performance. So far, with the pullback that we saw here in the first half of April, we've been able to consolidate and didn't even come down to touch the 100-day, but have instead started to move slightly higher here back up to the 21-day, aiming to see whether or not price can get back above this level. And I think the reason for this versus what we're going to see in other asset prices is due to the fact of the halving event and the market buying in anticipation of the halving event coming into play. But I want to go ahead and talk about what's really critical here, and that's getting above that 21-day moving average. I could sit here and tell you guys what's going on in the macrosphere, what's going on, for example, with some of the stocks we're going to be taking a look at, the underlying factors that will help to determine price, and what we can gauge from those metrics. But at the end of the day, price itself is going to let you really know what's going on here. Essentially speaking, if we can't start getting above that 21-day and making it support again, that's your biggest red flag when it comes to Bitcoin. It's your biggest red flag for altcoins. It's your biggest red flag for the broader direction of crypto assets, and probably a likely indicator of where all assets are going as well. I want to go ahead and dive into the bigger picture here, guys, because while I understand we had the Bitcoin halving event, I'm going to be talking about that later on. We're going to be talking about altcoins. We've got to spend some time to talk about what's going on, not just in Bitcoin and altcoin price performance, as we have seen this rebound over the last couple of days, but we have to talk about what's going on with equities. Now, guys, I don't know if you saw, if you're someone who trades in broader markets, like myself, who's more of a macro investor trader, but I have to tell you guys, if you aren't paying attention to what's going on in equities right now, you're missing the big picture. This is something that is incredibly relevant for crypto markets, and that was the recent weekly performance in equities. I want to spend some time to dive into talking about Nvidia. Nvidia closed down to have its worst week we've had ever since Nvidia started kicking off here in October of 2022. In fact, if we really go back, it was the worst week here since August of 2022. So coming up here on over a year and 3/4, a really bad pullback here in regards to equity prices. At least a year and a half, one of the worst weekly downward moves. And it's important to also take a look here at how this price performance kind of played out here. We'd had some chop here for a while. We indicated, as you guys can see here, for weeks now, that this aligned with the longer term line of resistance for Nvidia. Nvidia was approaching becoming one of the world's largest and most valuable companies, sitting at nearly a $2.5 trillion market cap at its peak. It had been facing consolidation, chopping at the 21-day, and we got this big fat red candle here, exactly 10% down, double digits for the day. This is very significant here. And the reason why is if you dive into the actual, kind of minute by minute price action, we'll take a look at the 15-minute chart here. What you see is that essentially when the market opened up, it gapped down, was not able to recover that gap, as most gaps usually closed, and it just started fading with no buyers coming in, fading again. Very few buyers coming in, fading into the close. This is panic selling here. This is essentially a signal that people are realizing that the trend could very well be up and that the gig is up here and that there's not much buyers or bid side support, at least at this price range. You've got a huge gap to get filled here to 683. And this plays into the broader topic we talked about of whether or not we're getting a recessionary bear market, something that would be much more painful and bring down all asset prices to a large extent. I think at a minimum we are seeing a typical correction at a minimum in asset prices. And for those who aren't prepared for that, you may get caught on the sidelines. With plays like Nvidia, there are a lot of big gaps here. There's the gap here, for example, to 673. There's the gap here at 421. And of course, there's the gap down here at 304. I'm not saying all those gaps are going to get filled. What I'm here to say, though, is that to not expect a correction at this point when Nvidia went up 800% since back in October 2022, ignoring the clear price action that was showcasing hesitation and a weakening of the trend, and that perhaps it was overbought. If we're not reading these signals, guys, we are going to get caught off guard. That's not me trying to, grandstand or anything. It's just me trying to warn you guys to keep an eye on these things. Watch these charts. AI is a huge leader in the market right now. If AI stocks start to fade, if GPU manufacturers like Nvidia that own a huge moat on this industry start to fade, that is a really bad sign. Another market leader that has really taken off are the Ozempic stocks. Now, essentially, Ozempic, as many of you know, is a drug that was originally utilized, from my understanding, from diabetes, and has been essentially now utilized for weight loss. And this has become kind of a quote-unquote miracle drug in the United States. Look, at the end of the day, guys, I'm not going to share my opinion on Ozempic. It's not a very positive one. But at the end of the day, look, it is helping to show positive results and weight loss. And the key thing here is that it's got markets in a frenzy, especially here throughout 2023. Large established pharmaceutical companies like Eli Lilly that were direct players within Ozempic as a drug and bringing it to market and are going to be some of the biggest benefactors. So a huge move in their stock price, right? Moving up here from around $300 a share up here towards $800. So we started to see a very clear fade here over the last 2 weeks. Clear downward moves in these stocks, no longer charging forward, showcasing some clear stalling and momentum. And you've got some big gaps that are likely going to get filled here at 670. You got one down here at 592. And you got a big gap down here in a kind of max pain scenario, I think, down to 454. There's a good reason why the stock is moving higher. The markets are anticipating that Ozempic is going to be continuously growing to become this flagship drug that is going to essentially cure all obesity and be a end-all solution. But at the end of the day, guys, whether or not that is true or not, that's not a debate we need to have here. At the end of the day, the market is clearly showcasing over the past 2 months that the trend is waning, that there are not as much buyers at these levels, and that perhaps a lot of this euphoric buying is exhausted. The max amount of kind of buy-side pressure outweighing sell-side pressure that usually drives up prices is probably coming to a close. And now people are in profit-taking, as we've seen clearly here with 2 months of what appears as very critical and clear distribution in price. Take a look here at Novo Nordisk, right? We can see here as well. Again, another build up here since 2023. Back here towards kind of around October 2022. Had a really nice consolidation when most of the market was selling off big time. Went here from around $48 a share all the way up to $138 off of the Ozempic craze. And now, after maintaining mostly green weeks throughout the majority of its history here since back in 2022, we have had not 1, not 2, not 3, not 4, not 5, but 6 full weeks of downward sell side pressure. Now, albeit it's only really basically cut down on this one last kind of blow off candle here that we had around 7% for the stock. But the key thing I want you guys to keep in mind here is that if we dive into that shorter term time frame here, you will see we're closing gaps. We're filling big gaps on the stock. And there are a lot to get closed on these names. You've got one here at 115. You got one here at 109. You've got a lot, even the big one down here as well at 80. Now, again, my point here in telling you all this is that you might be like saying, Nick, okay, I trade and invest in Bitcoin. I trade and invest in altcoins. Nick, why are you going through these stocks? Why are you talking about these things correcting? Because at the end of the day, guys, if we start to see an extensive correction in these assets, right? I'm not just bringing you some random, penny stocks or, small cap companies. These are multi-$100 billion, if not trillion-dollar companies. They are huge titans in their industries. And because of that, we need to understand that when these large companies, hundreds of billions of dollars, or in the case of Nvidia now with its kind of PE multiple expansion and the value people are paying, still with the recent correction is sitting at a $2 trillion market cap, when that equity value starts to get destroyed, when people start selling or offloading positions into cash, this is essentially a risk-off sign in the markets, and it is something that has a ripple effect, not just on other stocks, but also on other types of assets. Property markets, you can name it on bonds, also along with that as well, it's going to have that effect on cryptocurrencies to a very large extent. I know some people say meme coins and altcoins are so disconnected, but if you guys look at the correlation of Total 3 and its performance from back in October, November of 2022 to where they are now, and you look at how equities performed in that period of time, or just throughout the history of crypto, how generally during risk-on periods, like back in 2021 in November, where altcoins and crypto as a whole were peaking, and equities were also generally peaking if you look at the indices, you will see that there is a strong correlation between these two major markets. And essentially, we can see with names like Nvidia, while it has great PE multiple expansion and goes through these huge valuation increases on its share price, there are also periods of stark corrections. I try not to clutter the charts too much, but you can see here that over the grand scheme of things, these names can have extensive pullbacks when people least expect them. So I'm not even saying here that we're going to pull back this much, but imagine in a world even when we pull back, say, 30% or just 40% down here to the prior resistance of the last run-up, right? That is going to be, in this case for Nvidia, $1 trillion of valuation contraction. $1 trillion of wealth vanishes, gone. People aren't as wealthy as they thought they used to be. And there is a lot of overlap between people who have done GPU investing in stocks like Nvidia and CPU and other GPU manufacturers like AMD, a whole range of other technology plays. There's a strong correlation between these industries because of mining. People who are into gaming, they're very familiar with markets like cryptocurrencies. So I just want to emphasize here, whether you're talking about the retail crowd or institutional crowd, there's a lot of overlap here, and that can have a waning impact on the broader sectors, right? We not only had one of the worst sell weeks in Nvidia, but this was one of the worst weeks for the Nasdaq in a year. We can see back here, since back in September of 2022, actually coming up here a year and a half, we had back September 2022 here a 5.4% move. This was a 5.5% down week for the broader Nasdaq, meaning if you were in the broad technology markets, your portfolio just contracted 5%. You just lost essentially the past 3 months worth of gains. That's not a really good look, and it's not a good feeling for investors. It can stir panic. It can lead to much more extensive corrections. And if someone out there was market selling this dramatically up here, not to mention pretty much right around a slight deviation from the prior all-time highs, that might tell you that someone out there knows we are going to be expecting more and more chop, more and more downward pressure. However, it's one thing to talk about the Nasdaq and the S&P 500 correcting, but a more important way to view things is through the IXIC SPX ratio. This is the Nasdaq to S&P 500 ratio. And this chart, I think above all, guys, sends the clearest signal to me personally as an investor. And essentially that is that the AI narrative right now, as it is done. If Nvidia's price performance was not enough to startle you, to get you a bit concerned, we need to take a look at this. We had the worst week of performance in the Nasdaq S&P 500 ratio since back here. I would say since back here in October of 2022. Actually, it's worse than any of the weeks of performance there. I think it's the worst since back in April of 2022 here on the chart. Right? And the reason why this is significant, if we zoom out here, I'm going to take it here to the monthly. You'll not only see just clearly some signs here. If I turn off all the drawings, you can see very clearly here that there's been chop here for the last year in tech stocks since back in mid-2023 at the 200 week versus the S&P 500. That alone already is bad enough. But we can see historically that this is a sign for concern, because as we go throughout history, technology stocks usually have these periods of time where markets sucker in a lot of people off some new narrative. We saw it back here in 84 to 86 where people start buying back the tech stocks versus the S&P 500. They start outperforming the broader 500 largest stocks in the market. And then what you start to see is an inability to get back above that 200 week, which used to be acting as support and kind of the support line for a broader bull market and expansion of new technology stocks, which then leads the equity prices to severely underperform versus the broader market. We can see the same thing here happen to the dot-com bubble to an extent, a much more exacerbated run-up, much more exacerbated correction, and you would think buying down here for many people would be a great opportunity. Some buyers did buy in, but again, an inability to get above that 200-week moving average, leading to more capitulation. So my point here in all of this is that technology stocks right now and the broader technology industries of public markets are showcasing signs of weakness versus broader equities. And whereas the S&P 500 might have corrected about 2.8 or 3% this week, the Nasdaq collapsed 5%, signaling that we might be in bubble cap territory for some of these names. Maybe Apple, Microsoft, and the FANG stocks as a whole really don't deserve to be at the market valuation that they're at. Maybe Meta in this case, as it shows very clearly here for the last 2 months, is probably well overbought here at this range and has risen quite substantially from its lows back in November. Same with Amazon as well. We can go through the list here, guys. Amazon topping out exactly where it topped out last time. Google here as well, just slightly above the prior all-time highs and now facing some chop and resistance. This is not a good sign to see here. We don't want to see market leaders starting to show weakness, because when they do, that can have a weight on crypto prices. However, I understand a lot of people would say, Nick, the halving event just happened here, right? And this is a very significant event here, guys. I think above all, it is imperative here to keep an open mind that perhaps due to the halving event, due to the ETF, we could see some kind of asymmetric performance of Bitcoin versus broader asset prices. I'm not closed off to that. I just want to send you these very clear data points of what's going on in broader equities. But at the same time, I'm not here today to speak in a monolith opinion. The reason why I call this video one of the most important in 2024 is because I want to be prepared for both scenarios here. I want to show you the things that we can watch here. And considering that the halving is complete and that this is now going to go into effect and affect the inflation rate of new Bitcoin in the market, we need to be prepared both for the bearish case but also the bullish case as well. And now that we're starting the countdown to the next halving event, this is again going to be another thing to look forward to in the future and help us to adapt our models going forward. But the key thing I wanted to let you guys know about before we continue here, and we talk about some of those important data points, is to essentially talk about the importance of having an exchange that you can utilize during the event of both a bull market if things continue to extend, but also in a bear market to be able to pick up on those solid plays at a really solid discount, or at least buy into corrective periods as well along the broader uptrend. And that's why I want to spend some time to talk about today's sponsor, and that's CoinEx. Now, if you guys haven't heard about CoinEx just yet, CoinEx has been around for multiple years in the crypto space. They've become one of the leading exchanges by volume and active users, and they're one of the best exchanges that masks not only security or matches security alongside the ability to be able to invest in a whole range of different altcoins and narratives that we're watching in the market. Whether it's spot or margin trading, as well as a whole range of different features, you can access a whole range of different cryptocurrencies. And my favorite thing about CoinEx is that they have a whole range of different narratives or categories that they focus on that allow you to get access and exposure towards a whole range of narratives, like AI and big data, where you can go through and find a whole range of different plays, real world assets, emerging layer 2s, as well as Bitcoin ecosystem plays. So stuff like this is really imperative for me, because to be able to have one single exchange where I can get access to a whole range of different infrastructure protocols, meme coins, and different narratives that we've been talking about here on this channel, to have that all in one seamless experience and a beautiful and clean user experience, this is something that really makes CoinEx stand out and is incredibly important through good times and bad. But as we've gone through the halving of it here, as we see Bitcoin not only potentially expanding here, breaking through that 21-day, we also want to be prepared to trade on altcoins in the event that there is a breakaway, where in this case, cryptocurrencies continue to charge forward versus the macro picture. So that to me is very imperative, to make sure you've got an exchange platform you can trust that has been around for a long time, that didn't just pop up overnight. And not to mention as well, there's also a platform called Token Insight that did a really good report on a whole range of different exchanges. And what they found here is that CoinEx ranks A or higher on all of the three major categories of product overview, trading overview, and user experience. The reason I bring this up here is that not only does CoinEx stand alongside some of the larger players in the crypto industry when it comes to the user experience it offers, but it has probably the widest array of altcoins that I've seen when it comes to the narratives that really excite us. Not to mention, CoinEx as a platform has not only built its own cryptocurrency wallet, so if you're looking for a non-custodial way to manage a lot of your cryptocurrency assets, or if you're looking to get involved in a new early stage emerging infrastructure play like the CoinEx Smart Chain, which is essentially another EVM compatible chain that allows you to deploy smart contracts or decentralized applications, there is so much to offer from within the CoinEx ecosystem. So I definitely recommend you guys check out the link down below in the description to learn more about them and how you can start trading some of the key narratives that we're watching on this channel, as well as large players like Bitcoin and Ethereum through the CoinEx platform today. But coming here to close, I want to spend some time to talk about what we're going to be watching for when it comes to Bitcoin, and trying to get some hints about whether or not Bitcoin will be able to clear through that 21-day moving average. We first need to understand the two things that are not only just driving Bitcoin, but are also driving the broader crypto markets as a whole. We've talked constantly about how narratives are what really lead people to being more inclined to either market buy or market sell and drive trend direction in price. Are there more inflows of new capital than outflows? And the key thing that I've emphasized here constantly is that the narrative of this cycle, whether you're talking about Bitcoin or altcoins, is the institutionalization of crypto. And that is, in most cases, the Bitcoin ETFs, as well as the halving event making Bitcoin a scarce asset. But the key thing that I want you guys to keep in mind is that while we've got these things that have obviously been very large subject matters for Bitcoin in the broader crypto market over the last year, I want you to not neglect keeping an eye on the data here, not just buying into the narrative, but actually watching what the actual inflows and outflows are looking like. A lot of people who were really drummed up about the ETF back here have gone silent. And while we've been fair enough to cover when the ETF did even better than our expectations here on this channel, we still made a lot of great money in 2024 so far, trading a lot of different altcoins and cryptocurrencies. We are someone who's always going to tell you what the market is showing here, what the data is actually showing. And for the last 2 weeks, we have had outflows net overall on ETFs. Sure, in this case, people will point to me and say, Nick, you're ignoring the fact that it's the GBTC outflows that you're considering. Yes, I'm absolutely including the GBTC outflows because that was already as an ETN product holding hundreds of thousands of Bitcoin that have been around for years. We cannot neglect that as a factor. There is no rhyme or reason. And sure, maybe we can hope that eventually it's going to start to fade and there won't be as much sell-side pressure. And I have no doubt we'll get to that point eventually. But the key thing here is that it's happening and it's weighing down price. It's changing the supply-demand dynamic. Not to mention, though, this is not really what you need to be concerned about. What you need to be concerned about here is the abysmal drop in new inflows into the iShares BlackRock Bitcoin ETF, into Fidelity's ETF, all of the major Bitcoin ETFs out there, the ARK21 shares ETF, some of them on a weekly basis seeing outflows. This is really not good stuff, guys. Not to mention some not seeing any flows overall, any operations. So we've not only seen a consolidation down into some of the key ETFs here, but even those ones are starting to dwindle. We have gone from back here in week 10, where we had for multiple weeks 30,000 Bitcoin coming in here, easily stomaching the losses from GBTC alongside the other players, now dropping down to low single-digit thousand Bitcoin being entered into the biggest ETF on a weekly basis. That's not good, guys. I'm only going to say that here to be honest with you. I'm not trying to be a perma bear. You guys know we've talked about a potential for an altcoin cycle. We've talked about the idea that Bitcoin can charge forward, but these things have to change here. The halving event is not going to save Bitcoin here alone. We need the inflows with it as well. We need the contraction of supply, and we need excess surplus demand in order to really lead that bull market. With every cycle, there have been new wings of inflows into the space. You've had the inclusion of stablecoins into the equation, which used to be the major driving force of cryptocurrency prices. Now we have the ETFs. Unfortunately, I don't know if the ETF doesn't show up here, what the next narrative is. What's the next thing that's going to drive? Like, who else is going to buy Bitcoin, so to speak? Like, who's the next thing? Some people say central banks, could be governments who are buying it. Some believe that they are already doing it behind the scenes. My point here is that if they are already doing it, right, like that's already a very far out claim to make that governments or central banks are going on there buying it, other than some smaller nations, for example, like El Salvador. If they've already been doing it, then that buy-side pressure is already in to a large extent. Maybe they'll continue to do it. But the key point here I just want to get at, guys, is that, keep an eye on these ETF inflows, because if they're not showing up to the plate, Bitcoin's price will likely start treating prior support as resistance. That is here around 67K. It's the 21-day moving average, as we talked about. And we can see very clearly that in others' dominance here, right, in the altcoins, while we were really hopeful that there might be a breakout here, 13.5, when we started to see that weekly close here back in April, we closed out of a lot of our altcoin positions. We listened to the warning signs. We're keeping our eye on the charts here. We talked about it on the channel for nearly 2 weeks, that it was time to start preparing for something big. And last week we got that. And I think it may very well be the start of a larger downward move here? Could it be that we see a repeat like we did in October 2020, here December 2020 in altcoin dominance? Maybe it's not as dramatic. Right? Maybe we just go down a little bit more from this point. Maybe we chop here. Maybe this is the worst that we're going to see for others' dominance here. But it doesn't mean that their dollar values aren't going to continue contracting. Let's see how things play out. But if I were to give you guys my genuine opinion here, I think that at a minimum, you're going to come down for a double retest of the 200-day moving, the 100-day moving average. I think that there's a very good chance we can come down to the 200-day moving average in the event of a broader equity correction in the S&P 500 as well as in the NASDAQ. So keep an eye on this. Keep an eye for that contraction to those moving averages on your charts. I definitely recommend having those key ones like the 100-day, the 200-day, and also keeping in line with the 200-week moving averages as well. So if you guys will keep those on your radar, if you keep those charts in mind, I think you're going to be much better equipped to understand the trend direction of Bitcoin. And it's great to analyze Bitcoin's price alone, but when you start having those other signs, those are going to give you even more confidence in your convictions where things are heading. If you're seeing weakness in the ETF inflows, right, the halving event has already happened, the narrative around that is exhausted at this point, right? If you consider all these elements, it's quite easy to understand where price and trend direction is likely going to go. And it will help you to become a more successful trader in the grand scheme of things. Hope you guys enjoyed this video. If you did, consider dropping a like. It's a great way to support the channel. And I'll see you guys in the next video. Take care, everyone.